Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his Thursday expert, Mr. Jonathan Twomley. How you doing, sir?
I'm doing great, Michael. How are you today?
I'm doing very, very well. Hey, you brought up an article about somebody doing something pretty interesting in Brooklyn. Why don't you kind of tease us with that, and then we'll talk about, hey, is this a growing trend, a one-off? What's happening in the world of real estate?
Yeah, so this is something interesting I came across, and it's directly related to the fact that, well, it's related to two things that we've talked about a lot over the years. But one is that, the bounce back of New York City rents, right? From, during COVID, everybody said New York City's over, nobody wants to live there anymore. They're all going to move to the suburbs. Oh, and now they can work from home. They don't need to, blah, blah, blah. Nobody's going to live there. And, you and I were like, yeah, we'll see if that's true.
Yeah.
And so now we've got rents back to like astronomical historic high levels.
Yeah.
Even though the weird thing is nobody's going to the office. Like if you own an office building in New York, you are like in a world of pain.
Yeah.
But everybody is living here and working from home,
Mhm.
and not wanting to like even walk down the block to their office. So
Yeah.
very interesting. But related to this, and also related to the fact that the government has been handing out gobs and gobs and gobs of money to people who don't really need it.
Mhm.
uh, those two factors have combined so that private equity funds have now started buying small apartment buildings in New York City.
And just so people can realize, when you say small, are we talking eights and sixes and tens and
Yes,
stuff? Wow,
yes,
they're going way down.
yes. So we are talking about the kinds of buildings that used to be owned by mom and pops or small, investment companies in New York City. And, historically, these private equity funds have not gone after small deals because it's a lot of work to
Mhm.
keep on going. They would rather just place,
Yeah,
50,
one.
$100 million in one development and be done with it.
Mhm.
However, those opportunities have become so difficult to find. There's so much competition for them
Mhm.
that now, just in the same way that you have private equity funds going after the single family home market and displacing mom and pops there,
Wow.
now you've got them coming into to places like Brooklyn and buying up small apartment buildings,
Mm.
one at a time. And
Wow.
so Carlyle Group, which is a huge, huge group, uh, they it was reported recently that they have bought 130 apartment buildings, small apartment buildings in Brooklyn alone, just in the last like 2 years. And
Wow.
yeah, this is a very, very interesting phenomenon. And they're specifically going after buildings that have a certain,
Yeah.
there's something in New York called, there's a tax abatement, a 421 tax abatement. They've been going after buildings with a certain number of years of tax abatement left. However, it's just very interesting that they're so starved, they have so much
Mm.
money to
Mhm.
spend and so starved for opportunity for big deals that they're now going to small deals. And I have to say, I have a certain amount of I don't know what the right word for this is, but regret,
Mm.
maybe it is. Back in 2015, after I kind of got my first few deals done, I thought, hey, I'm going to go launch a fund, right?
Mhm.
And my idea for the fund was, hey, you big companies, right? You're starved for yield.
Right.
You know, I can get you higher yield, but there's smaller deals, which you don't want to deal with.
Right.
So how about we make a fund
Yeah,
and I'll
fund of
go
fund, if you will.
yeah, and I'll go do all the brain damage of finding these smaller deals
Right.
that have higher yields, and you'll get the higher yields and you won't have to do the work. Well, nobody went for it
Mm.
because in 2015 everyone was still saying, "Oh,
Yeah.
we don't want to invest in funds. We got burned by funds in the great
Mhm.
financial crisis and blah blah blah." And so it didn't go anywhere.
Wow.
But now you see things coming, where they are full cycle, and
Yeah.
like I see people raising funds left and right, and I also see now you've got like Carlyle, a
Yeah.
fund doing exactly the strategy that everybody rejected a few years ago, which was going after these smaller properties because why? Better yield than the big deals that all the private equity funds are fighting over. So, well, there you go.
Yeah, so there's a couple things I want to ask. So again, in your kind of opening there, you indicated that they're kind of adding these onesie twosie. I just want to make sure they didn't find one Brooklyn owner and buy all of his
No,
small buildings. It was
no,
onesie. Wow.
they've been doing, I mean, maybe, maybe there've been small portfolios that they've been able to pick up from
But
people
this
who
is not
own.
one deal.
It's not one deal. This has been
Wow.
like they're just
Yeah,
one
they have a
after the
team.
other.
They clearly
Yeah,
have a team that says, "Hey, you 5, 6, 8, 10 people, your buy box is Brooklyn, 421, whatever that is.
yeah.
Here's an almost unlimited checkbook. Go." And they bought 100. What do you think the cost per door is in Brooklyn? Was it like 400K a door, 500?
It's
Any idea?
yeah, I mean, you can, depending on the size and the neighborhood, I've even seen up to $1 million a door.
Okay.
I don't know. I don't bother underwriting those deals, so I don't know if those deals like pencil out in any way, and the market for those smaller ones is like basically somebody who's going to buy a two-family home and live in
Yeah.
half of it.
Yeah.
But I've definitely seen, it's really not uncommon to see small deals listed with a per door price in, close to $1 million.
Yeah. So again, so for the folks looking at this, they're still doing 5, 6, $7 million deals.
Yeah.
Right, which is big for probably most of my viewers, but small. Right, they'd rather place 50 million than 5 million because it's the
Right.
same work.
And that's why this is so surprising,
Right.
because the funds typically don't want to get involved with, writing a check for, if they're financing these, and the article didn't go into that much detail about whether they're financing them or just buying them for cash.
Mm-hmm.
But nevertheless, like if they're financing them, then they're putting out like, $2-3 million on these deals.
Yeah.
And if you've got like a $500 million fund that you're trying to place, it's a lot easier. Typically they're doing it, there's like 10 buildings in the fund, right? They don't want to do it with 100 buildings in the fund, because also that's a lot to administer and manage.
Sure.
But they're deciding that it's worthwhile to go after these buildings, and they must have figured out some way that they can manage them efficiently.
I want to run this idea by you. Again, this could be the whole buy by the foot, or kind of the reverse, actually. Buy by the inch, sell by the foot, kind of the reverse strategy. Do you think they could build this to some level and then flip it in one big package to somebody else and make that spread?
It's possible that that's what they're aiming at, and that was actually my idea too. My idea for the fund was, hey, what we're going to do is we're going to create the scale, right?
Right.
And then once we have the scale, then we'll sell it to somebody who is willing to pay for the scale, and they'll pay a compressed cap rate. That was the whole,
for the whole package. Yeah,
the whole package. That was the whole idea. Nobody went for it when I proposed it in 2015. But I still think it was a good idea.
No, I think it was. Yeah. And I think timing would have been amazing. Think about what you could have put together.
Oh my God.
Flipped out of, been crazy.
We wouldn't be on this podcast together.
Yeah.
I'd be
on an island.
Yes, yeah. I'd be on my own island.
Exactly. Yeah. So when I look at this, it's just, it kind of goes back to, we printed too much money. There's so much money sloshing in the system. What Wall Street used to do in 2018, 19 with office, retail, warehouse, storage, too much competition, no margin. People are overpaying. So they're going to another tier, right? They've already done single family homes. They proved that work in the 2008 crash. They've realized that old homes suck. So now they've gone to buy new homes. Now they're buying entire communities directly from builders. They probably will do that more as builders slow down. So builders still busy. They get their inventory of build for rent. And now they're coming down to the small stuff, right? The 5s, the 10s, the 20s. That's where I've played my entire life. And I think it is a strategy. I don't see them. This isn't the build for rent. I'm going to hold these for 20 years, which I could see, especially new stock. This is, I think, let's build a portfolio in Brooklyn. Let's build a portfolio in Chicago. I think they're going to be very targeted, and then they'll flip those for a compressed cap rate.
Yeah, I don't think you can pursue this strategy in the suburbs either,
No,
because probably the assets are going to be too far away from each other, and finding enough of them of that
Correct.
size and that are in the right condition. I mean, they're very specifically targeting, certain affluent neighborhoods in Brooklyn, and those are pretty compressed, right?
Yes.
So it's not, like there may be, say in Park Slope, Brooklyn, I don't know, 100,000 people living in that neighborhood,
Mhm.
but that's compressed into 20 blocks by 4 or 5 blocks
Yeah.
area, right? So
Yeah.
you can, even if you have, you've got 10 or 15 buildings in that area, you can have, a staff that's just
Yeah.
full-time running around
Yeah.
servicing those buildings, just 1 or 2
Absolutely.
people. So you can make it efficient if it's compressed. But if you had people in the suburbs having to drive
Hours.
miles, between properties, it just wouldn't work.
No, I think this is a strategy. I expect others. I think it will be very consolidated to metros like Brooklyn, right? Where there's a 4x20. Because I still think they're going to go for efficiencies, which means, I call it a buy box. It's going to be very narrow,
Yeah.
but they're going to buy them all. And I think they're going to overpay because, again, the mom and pop landlord's going to be, okay, great, I'll take that number. But they have a bigger plan, right? We're going to get this to some asset value. Maybe it's 100 million. I don't know. And then they're gonna compress the cap rate a point or point and a half, and then sell it off to one big fund.
Yeah. Well, I mean, listen, if they've got 130, they're way past 100 million
Oh, that's
at this
true.
point, right? They're
Yeah.
probably at more like 500, 600 million
Oh, wow.
into
Okay.
this, I would imagine. So
Yeah, that's my guess, but who knows? But this is very interesting. Wall Street is coming from they're coming to mom and pops because it's profitable. It's profitable. It's a great return.
yeah.
One rental at a time works.
Yep, absolutely.
Yep. Jonathan, hey, where can people find you?
So I'm gonna show you something new.
Yep.
That
I like new.
We're gonna do actually a whole, like, I'm gonna walk through this in our last section of the day, but just in case you don't have time to watch all this stuff, I have this ultimate checklist, which basically this is a 50-page ebook. Don't worry, it's not like 50 pages of dense text, but it is a checklist that basically walks you through every single step of how you find deals, raise the money, syndication, scaling. It's essentially my entire 60 video course condensed into a checklist. So if you have ever been curious about, like, well, how did those guys do that? Like, what is the process? This is literally like a checklist that you could follow to syndicate a deal and scale a multifamily business. So you can go get it. It's free. All you have to do is, I have a URL for you. It is bit.ly. I don't know if you guys know bit.ly, but bit.ly is a bit.ly/, Michael, you'll like this, one rental away.
One rental
So
away.
it is bit.ly/one rental away. And I think you have to put that HTTPS thing in front of it or it won't work. Otherwise it'll take you to like a, site not found link.
Okay.
So make sure you've got that in there. But like I said, just go to that link and you'll get this checklist.
Very cool.
And check it out.
Very cool. I will put that in the description of all our 3 videos today. I will be going there because I've never done a 100-unit building, so I need to add some skills and experience. Thanks, Jonathan.
And actually, sorry, actually, just one more thing about this. When you get this, then it's also going to make your life really easy, because then you'll get, with the email that comes with this, there's an email sequence, and it'll just give you the link to like my Facebook group and all that kind of stuff. So you don't need to go and like remember that. You'll just get the email that'll tell you where to go.
Awesome.
So
thanks, buddy.